The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 15th fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, no problem. You can always let those fingers do the walking. You can send me an email, steve@tfnn.com, and, of course, inside the Tiger's Den. Hey, any ping will do. So let's go ahead and get this show started on fantastic, fabulous Father's Day weekend, Friday. Happy Father's Day to everyone out there, Grandfather's Day, and I hope you have a great weekend out there. Let's make sure we do that. So welcome to the show again. I'm Steve Rhodes. Let's start off by taking a look at the Dow, down 209 points. Now, on average, the Dow, over the last 10 days, I will say would be the average, moves about 224 points. So it has accomplished that task. The S&P is off 8 points. The average move inside the S&P over the last 10 days has been 20 points. NASDAQ down 19, its average move. Now, it's off of the lows out here, but its average move is down 70 points. I don't believe it got down 70 points yet. Russell 2000 is off 4 points. Average over the last 10 days, 12 points. Semis are off 2. Their average movement about 18. So there's nothing really unusual, ordinary, anything that, in fact, it's kind of subpar. It's kind of below average as we speak right now. That's what it is as of 1:09 p.m. Now, gold, on the other hand, gold's off 28 bucks. It's normal. Average daily range over the course of the last 10 sessions is only 12 buckaroonies. So there's a problem in that little town. If you take a look at silver, off 72 cents, that's 4.25%. 30 cents is normally what it's down, so more than twice the normal average. How about light sweet crude? Light sweet crude trading down at 64.94. It's off nearly $2. $1.51, not too shabby with regard to what its average true range is. Of course, I want to look at what you want to look at, and let's go to our first requester via email coming in from Greg. Greg M. writes in and says, he said, "Good morning, Steve." Of course, he's in California. I'll say, "Good morning, Greg. Would you take a look at NVTA? I have a small position at 575. Let's go turn to the chart out here. 3 time frame chart. NVTA is Invite, I guess something like that. INVITAE. I think that's proper pronunciation. If it's not, my apologies. So you're in at 575. It's trading at 802. Let's put the applause meter on. Nice trade, nice investment. Let's continue reading here. In the last 3 months, a couple of ABCs have formed on the daily chart. How do you treat that? Well, I treat that as higher lows and higher highs. Taking your word for it, we'll go take a look at the chart out there. I take that as a bullish move. Plain and simple. You got to love that. Do the several ABCs form a larger one? And if so, which pullback do you pick as the C point? So let's take a look at the weekly time frame out here. And if we're looking at the same chart on the weekly time frame, kind of hard to really see an A to B equals CD out here, Greg. The best one, the more likely one, and there wasn't much of a retracement out here. This probably is in line with what you're looking at on a daily time frame, is where I'm using as the A point. The A point's pretty easy, right? That itself is going to be the March 26th level. That is at 435. And then this actually is your A to B equals CD pattern out here, because it did at least a 0.386 retracement. So, Greg, the larger, let's kind of go in reverse order here. The larger A to B equals CD pattern, the only one that I see out here, let me go ahead, I'll do it again. Let's not make sure there's any hocus pocus, dominocus magic. Finding the A point is easy. Now what you're doing is you're looking to see, well, price is moving up until it starts to pull back. Relatively easy. Your B point is going to be the high from April 16th. That's just simply going to be that next low that it creates. So the market's doing 75% of the work for you. So again, let's do the A, the B, the C point out here. And what you'll see on a weekly time frame, the 1-to-1 level, let's see if I can widen this just a tad more, make it a little bit easier. So in fact, let's turn off the market profiles. That'll make it easier for you to view, and for those of you that are following along at home. So now as we take a look at the first price projection from a weekly standpoint, Greg, was 688. Now, as price was coming in there, it was with a wide-ranging bar. In essence, that was the move off of the C point. Whenever you have a strong move off of a C point, whenever you hit a normal area, like a 1-to-1 level, with a wide-ranging bar, it tells you it wants to move higher. You had a third element in there, which was that it only did a 0.386 retracement, 38.85 to be exact. If you just picture taking a rubber band, and wrapping it around your finger as hard as you can so it cuts off the blood, and you only back it off 38%, and then you let it go, measure that energy to doing the exact same thing, taking that same rubber band, wrapping it as hard as you can and backing it off 68%. Which one has more energy? The one that's 38.6%, or in this case here, 38.85 to get exact. So it was telling you it had more energy to do more than a 1-to-1. Well, the other thing that this has done is continued to move higher. It's gotten up to these different levels, and this is going to continue, or should continue, up to these other levels. It'll continue as long as there's not a bearish reversal candle. Prices will move higher. This is why you want to make sure that you know your P's and Q's. I just like saying P's and Q's, but really you want to know your B's and B's, your bullish and bearish reversal candles. Now, if we take off the next level is your 2.618 area, that'd be 942. That's what the A to B equals CD patterns are saying. But Greg, what we also know is that price, in essence, has made a 100% move of a move by getting back to this swing point from March the 12th. Now, that's 798. You're trading at 804. Okay, so you're 6 pennies ahead of that. What you'd really like to see is this level being taken out with volume. That had 2 million shares. You're at 4 million shares. This is perfect. This is perfect. Perfect to say, Greg, good chance that what NVTA is doing is heading to its next swing point, the next place where we saw a change in trend, and that's up at the January 2018 level. That had 2 million shares. Even the big downdraft in January, which was January 8th, had 5.7 million shares. You're trading inside it as we speak right now. So it looks to me like where this is headed to is 1041. I know I didn't completely answer your question. I'm trying to. We'll go back and we'll take a look at the daily chart, and we'll take a look at its possible A to B equals CD patterns. I want to hear from you too. Steve at TFNN.com. Just put radio show question in that subject, Teddy. Make it easier for me. Great. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're looking at ticker symbol NVTA, or something like that, for Greg in California. And two questions remain on the table. One, he's looking at the daily chart, and he's seen A to B equals CD pattern, and is asking me, how do you decide what to choose out here? So the A point of the lightning bolt, that's easy. Whether it's a weekly, a daily, any time frame chart that we look at, it's going to be that low that is out there. So that becomes easy for us to pick. And so that first A to B equals CD that you would have been drawing is that March 28th low, and on a daily basis, looks like the high is probably April 17th. Then a retracement right into the top of a TAS market profile out there. That was support. That was at the 531 level. And then you've got your A to B equals CD levels that are drawn out here. I think you're struggling because you're looking at saying, should you choose as your, and that's the primary A to B equals CD that is out here. And the market is always revealing new information. So when you draw these patterns, use the new information to redraw the lines if it requires so. And what I mean by that, Greg, is I'm still going to use the same A point, but because the candle session on May 16th was such a decline, almost all the way back to where that other B point was, what I'm going to use is the high prior to that, which is on the trading day of May 14th, and then my retracement down into May 16th is going to be my C point. And now where you're at is the 1-to-1 level. To me, those would be the two A to B equals CD patterns. You ask, how do you decide which ones to use? You use new information, in essence, to redraw that pattern. So this says the next move is to the upside in the 897 level. That'd be the 1.272 A to B equals CD out there. Now, you can see the last 2 days out here, doji candles as we speak right now. So it tells you the market is getting tired. Makes a lot of sense because there are a lot of traders, some traders. There was 2.3 million shares that were purchased on the trading day of January 12th between 891 and 752. And those folks were just taking it in the shorts on the trading day of March 28th when that got down to 435. You know that prayer that you do when you don't have stops? Please, if you just get back here, I just want my cash back. And we're not talking about a cash back credit card out here. Use stops. Always use stops. You can always get back in on a trade out there. Well, so those folks are whom you are up against, I suspect, that are just saying, please, I just want my money back. You asked the next question, the final question, which was, hey, where's an entry point on a pullback? And you should most certainly get that out here. And I would say your first pullback level that you'd be watching for is the bottom of the June 5th session out there. That price is going to be 727. Yeah, it would be like flying. The NVTA Airlines taking a 727. The next spot would be about 692. So, Greg, thanks for writing in. Thanks for being up with us in San Francisco. Boy, what I'd give to just be out in Sausalito today, if the weather's good, and then heading to the sushi bar with you tonight. What's my favorite sushi bar, Sausalito? Sushi Ron. And if you go out there, just say hi to Yoshi. Tell him one of the sake boys sent you. We've got another question. This coming in from Scott. Scott wants to take a look at COTV out here. So let's go take a look at COTV for Scott and see what this is. We're just getting our charts here all set up. So you're long from 36.60, trading at 39.81. Or should I look for an exit point? I'm using my entry for a stop. Okay, and happy Father's Day to you as well. Wow, this thing really took off. Look at this wide-ranging bar. No, markets don't end on wide-ranging bars. It's a daily chart. It's a trading day of June 5th. This equity went from, well, let me tell you where it went from. It opened at 34.01, and it closed at 40. Got up to 40.25, closed at 39.87. That qualifies as a rocket ship. The question was, where should you look to exit this trade? And time frame. Folks, when you send me these questions and everything, maybe just give me a little perspective on when you got into the trade. Was it a trade? Was it an investment? Maybe it's a trade that should become an investment. All of those types of things out here. If you're asking me where this thing is headed to from a daily perspective, I believe that is the question. It would be perhaps different answer than on the weekly perspective. The daily perspective just simply is suggesting to you that you have a bit of resistance at 40.25. You're at $36.60. Any pullback in this could actually get down into 38.58 level. 38.58 happens to be Stevie's red line. So that's what I would be looking at. You have to make the assessment. If price did pull back to test Stevie's red line, do you want to, I guess, take that kind of heat? Not really that much, but based on you're in at 36.60, you're probably giving back 50% of your gains out there. Doesn't say to exit. There's nothing here that says to exit. And if we look at the weekly time frame chart out here, kind of put the week together, you're up above all kinds of resistance. This says that it's going back to its highs out here, the highs being July 21st. So it should make its way back to 41.67 to 45.97 out there. That's what it looks like when I take a look at this. And one of the reasons why I say that and share that with you, Scott, is because what was occurring last week was its price oscillator, bottom panel of our screen, difference between two exponential moving averages, was at the zero line. And last week was a bullish test. I mean, talk about a trampoline effect out there, a real bullish test. You have a rising price oscillator above zero, 35.45 on a weekly could be a pullback. There would be nothing wrong. It would still be bullish out there. So it looks pretty good. I don't think there's enough information here for a monthly time frame chart. Looks like this thing went public back in May of 2017. So that's what I see when I take a look at COTV. Thanks for writing in. Best of luck with that trade or investment out there. Now, speaking of Stevie's red line out there, let's go take a look at the markets and see what we can put together out here and what it is that Stevie is looking at, because inquiring minds want to know. And that's my mind. It's kind of inquiring. And so are we ready for a pullback or not? Isn't that the question at 1:25 in the afternoon? We do not have a unanimous vote on that. I'll tell you what I mean by that. If we take a look at the NDX 100, for those of you that believe the NDX 100 will lead things higher or lead things lower, then you want to be focused on this chart. Because what the NDX did today is nothing more than come back and test Stevie's red line. I know you're going to ask me, why does Stevie's red line work so well? It just does. I don't have the answer. There are several things that just work, and you just say, man, this is just a cool tool to assess what the markets are doing. Now we're going to get some conflicting information out here, but again, I say to you, whoever you are, that believe that the NASDAQ is the indice that will lead things higher or lead things lower. It has rejected a level of it has tested and rejected a level of support. If I say rejected, somebody's going to think it crashed right through it. Did what it was supposed to do. 72.2175 is the exact number on the NDX as of 126 in the afternoon. It'll be different at 127. You see, it just changed by a penny. But use the 72.20, 72.21 as level of support. The NDX, people just sell the Sam heck out of it into the close today, and it closes below there. Then the answer is we have a retracement underway, a retracement in the bull market. Otherwise, the NDX 100 wants to continue to lead things higher. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 210. So Goldilocks is down $29. And I've got a request to go take a look at gold as well as some of the mining equities that are out there. And so we're going to start with, because it's Friday, because it's the end of the week out here, we're going to start with the weekly time frame chart for gold. Now, if I had $1, no, not $1, If I had $1,000,000 for every time the price oscillator gets to zero, which then leads to a meetup of Stevie's red line and price, then I would be the wealthiest man in the world. Because how often does it happen? Like all the time. Another one of those phenomena that I can't tell you why, I just know that it does. And as we take a look at the weekly chart, the August contract for gold, you will see that that price oscillator is at 0.596. Now, it is a nasty looking bar, so to speak, out here with regard to gold. Looks like we're going to close at its lows. You're also going to see that it happens to be, or will be, it's not printed on my screen, but just take my word for it. It's going to be, from a weekly perspective, a Tom DeMark setup 9 count. Now, do those 9 counts mean anything? Well, you tell me. We go take a look at the last 9 count that we had out here. It was when price was moving higher. It was, when I say moving higher, I'm just referring coming back to March 3rd, 2017. Now, when it got to that number 9 out there, it went ahead and reversed course and it pulled back out here. Is that what's going to happen this time around? Well, I don't know. The 9 count before that took place out here with price just screaming higher. Big wide-ranging bar on a weekly basis, March 4th, 2016. And what did price do? Well, price just simply moved sideways out there. Did a little test of Stevie's red line. So what is gold doing on a weekly basis? You're right now, in essence, reaching that stall point area. Why? I know why. Why it works? I don't know. I don't need to know. I just need to know whether it works or not, so that way when you and I are chatting, which is what we're doing right now, I can have conviction and confidence to be able to share with you why I believe something is doing what I'm doing, and then go back on a chart and show you other examples of that, so you can say, something to think about. Does that mean that gold's not going to head a bit lower or so, on Sunday night or Monday? No, that's not necessarily what it means, but we're getting to an exhaustive point in the move. We're especially doing that because today, or this week's bar, traded into bars 5 and 6 out here. And it's a signal of, believe it or not, a waning momentum. I know you say that today with gold trading down $29, but how can it be waning? Look, we'll just come back and we'll be taking a look at it. What else does this chart tell you about gold right now? If you go back into the 2016 timeframe, what do you see? You see a series of higher lows, including this week. And you see a series of, in essence, higher highs. We kind of stalled on the higher high thing back in January of this year, 2016. But basically, that may be nothing more than a consolidation. We're testing the swing point from December 15th. So if you look at a weekly chart and put it all in perspective, it really doesn't look too bad out here. If we change this to a daily time frame, well, then what we're going to look at it, we're just going to say this is miserable. And I'm not saying gold can't go lower. And if you're going to pin me up against the wall and say, well, you've got to give me a price, where can it go to, Steve-O? I would tell you it would come down right here to this little red dash line around 1263.30 or 1280. Wouldn't be a huge move to the downside, but we should see a stalling of price. We should see, from a weekly perspective, we should see a test of price and Stevie's red line. I didn't give you the red line, this 1318. That will continue to move down, depending on how this all plays out here. But when I take a look at gold, it's not exactly as bad as maybe everybody else might be thinking. Of course, I don't know what everybody else is thinking. Now, if we take a look at gold, I'm just curious. I haven't done that. I was out earlier. And if I take a look at it, just curious, I don't know about you, but I'm just curious, what's gold doing in all the currencies out here? And the dollars, we know it's sucking wind, but it's really not doing too shabby in terms of yen, in terms of pounds, in terms of euros out here. Certainly has not busted through any prior lows. So I will just leave you with the thought of something to think about. Now, there was a request to go take a look at some of the individual equities out there. Which ones were those? They were the NQ. We'll get to the NQ. But let me come back and make sure that, wheat and precious metals was one of them. WPM is a ticker symbol. So let's go take a look at it. If you put an SPM, You're not going to get anything to show. Just so we know, SPM's not going to do it. So wheat and precious metals, I don't think I'm getting the active data right now. Sometimes there's a delay. Let me just come over here. Let me just make sure. Maybe it is at 22.17. If it's at 22.17, wow, what a strong stock. I don't know that it is, but let me just see. WPM, let's see what it is. It's 22.17. Jeez, wow. I take that back. Was the question, how was wheat and precious metals doing? Look at this. This thing is bullish. Now, this is a weekly time frame chart. It's absolutely had no movement out there. We know that's not the case with gold. Of course, silver, what has silver been doing, right? Well, yeah, because this was silver wheating, right? So we should probably see what has silver done for the week out here, just to try to tie together the equation of taking a look at this. Come on, get through here. And I apologize for this little slight delay on my system. I think I have maybe a few too many things running, but that's okay. So what's silver actually done for the week? Silver on a weekly basis, just coming back and testing Stevie's red line. So silver doesn't look too shabby, just part of the consolidation. Hasn't fallen apart at all. Coming back, testing a level of support, Stevie's red line. So no big deal there. Back to wheat and precious metals out here. Although it's just been small-bodied candles, looks like a steady continued move up into the January 26 level. That price point is about 22.72, about another $1.50 out there. There was another request. Which one was it? So wheat precious metals look pretty good. Pan American silver. Let's go see how this is doing. This looks even better than silver wheat. Yeah, this looks good. And it looks good. 1722 is a level of support out here, but really not too shabby. What was the last one? The last one was AG. Is that First Majestic? I think First Majestic silver. I love that First Majestic movie out there. Who was in that movie? What's his name out there? You know who I'm talking about. Anyways, it's kind of I thought it was kind of a cool movie, but Silver Majestic. This looks pretty good. Nothing bearish about. Now, in the case of AG, again, it's a weekly chart. Better to look at the weekly chart, I think, right now. Kind of keeps things in a perspective out here. You'll see that its price oscillator is getting to zero. So what First Majestic is getting ready to do over the coming sessions, it could be 2, 3, 4, 5 coming sessions, is a test of Stevie's red line in price. That means this could move sideways while Stevie's red line moves higher out there. Currently priced at 676. If it tests and rejects that level, then that's a signal that it's ready to move higher. Okay, so that takes up all of the time during this segment. When we come back, we're going to look at the NQ for Maria in New York. Maria, you should be over in the Hamptons watching the U.S. Open. Pretty spectacular golf going on by Dustin Johnson. Tell me what you want to know about the NQ, and I'll give it to you. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Maria wants to know a question about the NQ, the NASDAQ in essence. So we're going to take a look at a couple of different things out there. And what she's asking is whether or not this week, maybe because of the price movement, price action this week, whether or not it suggests, and I apologize for not looking at the camera, I'm trying to get a chart here going, whether or not it would indicate to us that prices are going to move higher for the next 3 to 6 months. I think I paraphrased that properly, but I couldn't actually see the question out there. So with regard to the, that's pretty much the question, right? So I'll put it together for you like this. What's the current message of the markets? What is it do you want to be able to look for, on both sides of the trade? Like a soccer game, right? Soccer, you have to play both offense and defense. So if you equate soccer, which is what Maria's going to be watching in 20 minutes, if you equate soccer to trading the markets, you want to have both sides of the trade figured out, whichever side it is that you're on. So if we start with perhaps what is the single most important element in trading any indice, in trading any commodity, in trading basically anything, is understanding where the flow of capital is going into. I'm not speaking about just U.S. dollars. It is time for everybody to stop thinking only in U.S. dollars. Don't you think you're being a bit selfish by just doing that? To yourself, you're being selfish. You don't want to do that. There's traders all around the globe that are trading these markets too, and worldwide markets. Just think, you really think that our children, it's Father's Day, or our children's children are only going to be trading just the U.S. markets? Don't you think that all the barriers and the technology and everything's been broken down? You're going to be able to trade whatever it is that you want. And how are you going to help them and assist them in trying to identify what it is they should trade? And the answer is you're going to tell them to follow the money. The old Jerry Maguire, she wants to show you the money. I say follow the money out there. And in the case of the NASDAQ 100, where we're at, I'm still just looking at a daily chart. If I turn these to weekly charts, it wouldn't matter. What these tell us is the global flow of capital is still going into technology. We broke out this week above prior highs. We did it in dollars, we did it in euros, we did it in yen, we did it in pounds. It's a beautiful thing. We've had major moves in currencies, but what I can share with you is that the NASDAQ 100 specifically, and we talked about that earlier, so I'm going to show the NASDAQ composite this time around. There's nothing on this chart to suggest to you or I that the NASDAQ doesn't want to move higher. Now, that's the bullish side of the trade. What do we have to be cautious about in order to be able to get a retracement, be able to come back? You don't have to worry about missing the beginning of the show, because Basically, it's going to be the same thing. I'm just going to show the NASDAQ composite. It's basically the same thing here. And the same thing being that if we take a look at what today's action has been thus far at 1:45 in the afternoon, has been a pullback to what? To Stevie's red line. It has been a test of support. 7706.16. The NDX 100 doing the exact same thing out here. And what I present to the listeners out there is it more important to understand, do you believe that the NASDAQ can pull things higher and pull things lower? And if you do, then all we've seen today is just a simple test of support. Now, in the case of the NASDAQ composite, same thing is kind of going on inside of the NDX 100. But the NASDAQ composite, a little bit larger, we can see the price has been moving low, higher, less relative energy out there. Always the potential for a problem. We don't have it. You can see that if you take a look at the low going back into April, we are in wave count number 6, letter F on my chart. We're likely not to make a higher high today, Maria, but we may come Sunday, Monday, Tuesday, take out the prior high of yesterday, and then get to wave count number G. We may do that, and price may continue moving higher, doing less relative energy. All those things don't mean it's a top. Just means, boy, you've got to be cautious. You know where the sellers could be camped out. And if at any point in time it unfolds like that and plays like that, then what we'd be looking at is your garden variety retracement. Now, a retracement inside the NASDAQ composite might be pretty healthy, enough for everybody to say, hey, the bull run is over. When I say retracement, you get back into the 7,300 level. The exact number would be 7,334. Not saying that's where it's going. I'm saying that's where it could go, and there would be absolutely nothing wrong. Probably wouldn't even get all the way down there, but it most certainly could. But right now, as we speak, the NASDAQ itself is strong like bull. Now, it's doing that in the face of Apple being a bit weak out here. If we take a look at Apple, what we know about Apple is that it made a topping pattern. Take a look at it. It's moving higher, doing less relative energy. The bears show up, the cavalry. The bearish cavalry shows up June 7th. The very next day, June 8th, price gaps down, gets below Stevie's red line. What does it tell us? Tells us that Apple wants to pull back. Where could Apple pull back to? Well, Stevie's red dotted line is one of those spots you'd look for. That's a trading session from May 23rd. That's the low of 185.76. You're at 188.76, only $3 more to the downside. Looks like this is getting ready to make a Tom DeMark setup. Today would be count number 6. So maybe Apple doesn't do a whole lot for a couple days. But Apple, being the leader out there, weighted leader inside the NDX 100, so far not so bad considering the type of topping signal that it has in there. If we go take a look at Apple, just kind of curious volume-wise out here, what it's doing. And let's just put it on the 3 time frame chart. That might be easier for me. And we're still on the daily. Let's get rid of that. And it completed an A to B equals CD as well out there. So that's several patterns that it completed. This thing was moving higher with 23 million shares. Today you're at 23 million shares. Let me put it on a weekly time. Well, let me just go to the weekly time frame out here. The weekly time frame from Apple. What have you done? 101 million shares out here. You made a high with 116 million shares. It's not exactly like there is volume off of these highs. So Apple, topping pattern, a topping pattern at this stage here, just kind of pulling back with the lightish type volume. Apple's got just amazing, huge volume and support on the week of April 30th with 252 million shares out there. So it doesn't look too shabby. So, Maria, that's my take on the NDX 100, the NASDAQ composite. As long as price continues to stay above Stevie's red line, everything looks good. Let's watch out for that 7th wave move that could take place Monday, Tuesday, something like that. And let's watch for some type of bearish reversal candle out there. That would then say, you get below Stevie's red line, you have your garden variety type of retracement out there. Now, different story and total different setup. Oh, I can't believe I did that. Oh, I guess I did that because I typed in Apple. What was I thinking? Let me just change this back because otherwise I'm bound to forget to do that. And so now it's a total different story out here in the Dow. Oh, in the New York Stock Exchange. Well, let's take a look at both. Since I mentioned one, let's go take a look at both. Take a look at the Dow here. So today you gap down below Stevie's red line. Says there's a retracement coming to a theater near you inside of the Dow. It's the exact opposite. It's busted through support out here. Support being Stevie's red line. That's its message. The message inside the New York Stock Exchange is the same thing. So, Maria, it's truly all about the NASDAQ against the world. Used to be Tiger against the world, in tournaments. Now it looks like it's Dustin Johnson against the world. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So Nicholas writes in, and Nick wants to, he's asking the question, is today possibly the C point of an A to B equals CD to the upside? So here's what we know right now, and he's referring to a small A to B equals CD because there's several that could be drawn out here. And he's referring to using the low of May 29th out here as your A point, your B point at the June 11th. So I certainly see that. He's asking, can you use today as a C point? You can, but we don't know, and it's about a 0.382 retracement that we've done so far. We just don't, when you're looking for a C point, that's the harder thing to do. One of the things you'd like to see is some type of support, trading back to Stevie's red line as an example. Before we went to break, we saw the price was trading below that, so that's not going to work out there. You'd like to see something on the look at the futures contract, because I believe it tells you the future out here. Prices below bottom of a profile, so that's not good. So I don't have anything out here, Nick, to suggest at this stage that the Dow has reached support on a daily time frame. I can look at other time frames, which we will just for a moment. And the only time frame I'm looking at would be a 30-minute time frame. And on a 30-minute time frame, price was moving lower, doing less relative energy, absolutely. And it was doing that into the low that we saw. That was at 11 o'clock. Formed a hammer candle. So you got your bullish reversal signal. No follow through on the next session. Doesn't mean it's not a potential bottoming pattern. When you got the session after that, this was at the noon session, which you had another bullish candle, piercing candle out there. And the price was able to, in essence, get above its little red line. What it hasn't done thus far is really close above what it needs to do. A counter trend rally could just take you up to 25.078. That's where price would have to get over the top of its 30-minute profile in order to suggest that this was a bottom and then that you were right about that using today's low as the C point out there. Otherwise, things can continue to move lower. So a good question, great question. You've got to be able to find support in order to go ahead and make that call. I don't know that the market has proved that to us. Folks, have a happy Father's Day. All you fathers, happy Grandfather's Day. I look forward to seeing you on Magical Monday. Take care. Be safe. Thanks for being here this week.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.